For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Institutional investors who manage a portfolio valued at a minimum of $100 million are mandated to submit a document known as Form 13F to the United States Securities and Exchange Commission. This requirement must be fulfilled no later than 45 calendar days following the conclusion of each financial quarter. Form 13F is particularly significant because it provides a detailed and transparent window into the stock purchasing and selling activity conducted by some of Wall Street's most influential asset managers. By reviewing these filings, everyday investors can gain valuable insights into which securities the financial elite have been bullish or bearish on. For the quarter ending in March, the deadline to submit this filing was May 15th. Although Warren Buffett is frequently the most followed figure when it comes to asset management activity due to his reputation and long-term success, he's not the only billionaire investor who has generated impressive above-average returns over time. Another notable figure who often attracts significant attention from institutional watchers is billionaire Stanley Druckenmiller. Druckenmiller oversees the Duquesne family office, which manages more than $3 billion in total assets. His decades of experience, along with a track record that includes successfully navigating numerous financial crises, have made him one of the most closely followed investors in the financial community. Stanley Druckenmiller's investing philosophy typically involves taking both long and short positions across a wide variety of asset classes. His ability to adapt to market changes and identify high-conviction opportunities in real time has contributed to his strong performance. More recently, it is his approach to capitalizing on the rapid development of artificial intelligence that has sparked considerable interest and debate among investors and analysts alike. Over a period of less than 2 years, Druckenmiller executed 2 high-profile exits involving the artificial intelligence sector's most recognizable companies. At the same time, he significantly increased his exposure to another powerhouse within the same broader theme. While many corporations have been swept up in the tailwinds created by artificial intelligence advances, few have become as synonymous with the trend as Nvidia and Palantir Technologies. These 2 companies, each dominant in their respective segments of the artificial intelligence space, have produced staggering returns since the start of 2023. Nvidia's stock has climbed by over 827%, while shares of Palantir Technologies have soared by an even greater margin, rising more than 1,920%. Nvidia's primary advantage lies in its near-total dominance in the graphics processing unit market, especially within artificial intelligence-optimized data centers. These data centers, which require immense computing power to perform the parallel processing tasks essential to artificial intelligence applications, have largely relied on Nvidia's Hopper series and next-generation Blackwell chips. These chips offer performance metrics that clearly outpace competitors, which in turn has allowed Nvidia to command a premium pricing across its product line. This pricing strength has contributed significantly to its rapid revenue and profit growth. Meanwhile, Palantir Technologies has focused its efforts on developing advanced software platforms that integrate artificial intelligence to assist in data analysis and decision-making. The company's Gotham and Foundry platforms have proven particularly effective. Gotham, which is tailored for use by governmental entities, has been central in securing long-term multi-year contracts with various United States federal agencies and their strategic partners. The consistent income generated from these contracts has helped Palantir achieve a year-over-year sales growth rate that consistently exceeds 25%. In addition to top-line growth, this recurring revenue has pushed the company toward dependable profitability, making it one of the few artificial intelligence-driven firms to reach that milestone. Despite the seemingly unstoppable momentum behind Nvidia and Palantir, Stanley Druckenmiller made the calculated decision to completely exit both positions. The Duquesne family office divested all 9,500,750 shares of Nvidia. Similarly, between March 31st, 2024 and March 31st, 2025, his fund sold off the entire holding of Palantir, totaling 769,965 shares. While it's possible that these moves were simply strategic decisions to secure profits after substantial gains, there may also be other motivations underlying these sales. One potential reason for unloading Nvidia could be the escalating concern over increasing competition. A growing number of Nvidia's largest clients, which include some of the biggest players in cloud computing and technology services, are beginning to develop their own artificial intelligence-specific graphics processing units. These internally manufactured chips may not yet rival the performance capabilities of Nvidia's Hopper or Blackwell architectures, but they are likely to be less expensive and more accessible. The emergence of this competition could chip away at Nvidia's pricing power and market share. Indeed, Nvidia's decreasing gross margin in recent quarters suggests that its dominant pricing position may already be under pressure. Another looming concern is the possibility that the artificial intelligence sector could experience a speculative bubble. Historically, every groundbreaking technology over the past 30 years, including the internet, genomics, and renewable energy, has endured an early-stage investment bubble that eventually burst. If artificial intelligence follows the same pattern, companies heavily reliant on this theme, such as Nvidia, could face significant corrections in valuation. This risk is amplified by the fact that over 90% of Nvidia's revenue in its most recent fourth quarter originated from its data center segment, which is directly tied to artificial intelligence. A downturn in demand or a shift in sentiment could hit Nvidia's bottom line hard. In contrast, Palantir's diversified government contracts and its subscription-based foundry platform provide some insulation from an artificial intelligence downturn. However, even Palantir is not immune to macroeconomic forces and changing investor sentiment. Its extraordinarily high price-to-sales ratio, which stands at 103 based on the last 12 months, raises concerns. Historically, companies at the forefront of technological revolutions have topped out at price-to-sales multiples between 30 and 40 before experiencing sharp pullbacks. While Druckenmiller was moving away from Nvidia and Palantir, he was simultaneously increasing his stake in another pivotal player in the artificial intelligence ecosystem. In the quarter ending in March, Druckenmiller acquired 491,265 shares of TSMC. This represented an increase of 457% compared to his holdings at the end of December and vaulted TSMC into the 9th largest position within the Duquesne family office's portfolio by total market value. Taiwan Semiconductor plays a critical and irreplaceable role in the global semiconductor supply chain. It is the world's leading contract manufacturer of advanced chips and is heavily relied upon by companies across the artificial intelligence spectrum. TSMC is actively expanding its chip-on-wafer-on-substrate capacity, a process that involves stacking high-bandwidth memory atop silicon wafers to improve data transfer speeds. In 2024, TSMC was capable of producing 35,000 such units each month, and it expects to increase this to 135,000 monthly units by 2026. This level of production is essential to meet the ever-growing demand from artificial intelligence data centers. At present, a large portion of this demand originates from Nvidia. However, Taiwan Semiconductor stands to benefit even if that dynamic shifts, because it also serves a broad base of customers, including advanced micro devices and Broadcom. These companies are also expanding their artificial intelligence-related chip offerings and are leaning on Taiwan Semiconductor for their manufacturing needs. What makes Taiwan Semiconductor a potentially safer bet in the face of a future artificial intelligence correction is its diversified revenue stream. Unlike Nvidia or Palantir, which are heavily exposed to artificial intelligence trends, TSMC generates income from a wide array of markets. Its chips are embedded in smartphones, wireless connectivity devices, consumer electronics, and automotive systems. Notably, Taiwan Semiconductor is the exclusive manufacturer of Apple's central processing units for the iPhone, which adds further stability to its revenue base. This breadth of operations provides the company with more resilience should artificial intelligence demand falter. Nonetheless, Taiwan Semiconductor does face some geopolitical and macroeconomic risks. Tariffs are one such area of uncertainty. Although reciprocal tariffs were temporarily paused for 90 days starting on April 9th by President Trump, there is no guarantee that TSMC will avoid trade-related friction in the long term. Most of the company's advanced manufacturing facilities are still located in Taiwan, even though it has recently opened a new fabrication plant in Arizona. Depending on how international trade policies evolve, these tariffs could impact Taiwan Semiconductor's profit margins. Valuation is another factor to consider. At a forward price-to-earnings ratio of 18, Taiwan Semiconductor stock might appear attractively priced. However, its trailing 12-month price-to-sales ratio exceeds 10, which is about 16% higher than its average over the last 5 years. This suggests that the stock may already be trading at a premium, and that future returns could be more moderate unless earnings growth accelerates meaningfully. To summarize, Stanley Druckenmiller's recent portfolio adjustments show a clear and deliberate shift in strategy regarding artificial intelligence investments. While he opted to exit positions in Nvidia and Palantir, two of the sector's most high-profile names, he significantly increased his commitment to Taiwan Semiconductor manufacturing. The reasons behind these decisions likely include concerns about competition, valuation bubbles, and long-term sustainability. As the artificial intelligence landscape continues to evolve, investors would do well to monitor the moves of seasoned professionals like Druckenmiller, who have a track record of anticipating market inflection points. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.